The dollar is losing its grip on global financial systems, and most Americans have no idea what that actually means for their money. While people are watching the daily news cycle, countries around the world are quietly preparing for a future where the US dollar is not the default currency of global trade. That shift is going to reshape what your savings are worth, what your investments are worth, and what your retirement is worth. And the people who understand what is happening before it lands are the ones who will be positioned to protect what they build. At the same time, the Federal Reserve is about to start cutting interest rates aggressively in a way that is going to push trillions of dollars out of cash and into anything that has potential to grow. Both of these forces, the dollar losing its grip and the rate cycle changing, are arriving in the same window, and they are both pointing toward the same conclusion. The next few years are going to look very different from the last few years, and the assets and structures that you choose right now are going to determine whether you come out ahead or get left behind. So, I want to walk you through what is happening, why it matters, and why XRP sits at the intersection of where the world is headed next. Now, I'm Camila Stevenson, and around here we talk wealth. Go ahead and like the video and also subscribe if you have not already so you do not miss what is next. And I want to say this is not financial advice. This is only for educational and entertainment purposes. Do your own research. Now, drop in the comments what you plan to do to make sure that your dollar don't lose purchasing power. Are you investing in gold and silver and precious metals? Or are you investing in XRP? Or are you investing in the stock market? Or do you like real estate? Are you parking your money in property? I'd love to hear what you are doing with your cash flow. All right, let's go ahead and start with this. Let me lay out what is happening so that you can see it clearly. And I'm going to break it down in some of these terms as we go, because I know everybody who is watching has not been swimming in this type of language for years. Okay. And I want to get better at this so you can understand what's going on, because it matters for you and your money and your financial future. Now, for the last 50 years, the global financial system has been running on something called the petrodollar. The petrodollar is a simple deal that was made back in the 1970s between the United States and Saudi Arabia and the other major oil producers. The deal was this: oil producing nations would sell their oil only in US dollars. Every country in the world that needed to buy oil, which is basically every country, had to first get their hands on US dollars to make the purchase. So that created a permanent global demand for dollars, which is what allowed the United States to print money, run massive deficits, and keep the dollar as the dominant currency for half a century. That deal is breaking apart as I speak. Let me walk you through who is doing what, okay? Now, OPEC, that's OPEC, which stands for the Organization of the Petroleum Exporting Countries, is the cartel of oil producing nations that controls a significant portion of global oil supply. Countries in OPEC include Saudi Arabia, Iran, Iraq, Venezuela, and historically the United Arab Emirates, which everyone calls the UAE for short. Now, the UAE has been signaling its move away from OPEC, which is one of the strongest structural signals that the bilateral oil settlement architecture is fragmenting. When one of the largest oil producers in the world signals that they're looking outside of the dollar system, every other country in the deal is going to pay attention to this. Saudi Arabia has openly discussed accepting other currencies for oil sales. China and Russia are settling bilateral trade in yuan and rubles instead of dollars. India is doing similar deals with several countries to bypass dollar settlement. The BRICS nations are working on a shared payment infrastructure that bypasses the dollar entirely. BRICS, again, is a group of major emerging economies, including Brazil, Russia, India, China, and South Africa. And they have been adding new member countries over the last 2 years to expand the bloc. And central banks around the world are doing something even more telling. They are buying gold at the fastest pace in modern history. When a central bank, which is the institution that controls a country's currency and reserves, buy gold instead of US dollars, they are quietly signaling that they want to reduce their dependency on dollar reserves. That is not fear talk. That is real preparation by the most informed financial entities in the world. And so I follow what they're doing. Now, let me be clear about something. This is not anti American. This is not political. It is structural. Okay. Countries around the world are looking at the size of US debt, which is now over $35 trillion. They're looking at the speed at which US prints new money and the risk of being on the wrong side of US sanctions. And they're quietly deciding to build alternatives because of this. So that is what happens when any financial system gets too large, too leveraged, and too one-sided. The market is building around it. So the dollar is not collapsing tomorrow. Let me be clear about that. But the world is quietly preparing for what comes after dollar dominance. And that preparation is happening right now in real time, while most people are watching the price of XRP and arguing about whether it will ever move. Okay. There is so many other things that you have to be educated about that is going to play a role in your financial future. And I think it's time to get intelligent about what we watch. Yes, we do want the price to go up, but there are so many other things that you have to look for that's going to affect all of this. And I'm telling you, the economy is showing signals. If you don't see the signals because you wrapped up in just looking at the price, that's going to be on you when the day hits, when all of this unfolds. Now, let me help you to understand something about the rate cuts, because that's what makes this moment very unusual. Okay. The world is moving off the dollar at the same time that the Federal Reserve is about to start cutting interest rates aggressively. So let me back up and explain something. The Federal Reserve, which we call the Fed, is the central bank of the United States. The Fed sets the level of interest rates that ripple through the entire economy. When the Fed raises rates, borrowing becomes more expensive and money sits in safer places like savings accounts and bonds. When the Fed cuts rates, borrowing becomes cheaper and money looks for places to grow because cash and bonds stop earning enough to keep up with the inflation. Now, Jerome Powell has been the Fed for the last several years, and today that position exits and it is passed on to Kevin Warsh, and he takes the seat today.